Hello, everyone. Welcome to our Q2 earnings call. So before we started the Q&A session, we will have our IR Ronnie to report the numbers of Q2. So now we are going to review the financial numbers of Q2. Q2 revenue reached 124 billion NT dollars, marking a record high quarterly result. This represents a 20% year-on-year growth and a 4% sequential increase. That said, the strong appreciation of NT dollar against the US dollar in Q2 somewhat weighed on the reported growth, making it a little bit lower than originally expected. Gross profit in Q2 was 44 billion NT dollars, up 25% year-on-year and 17% quarter-on-quarter. Driven by robust shipments from our data center related and passive component businesses, GP margin in Q2 was 35.5% versus 34.1% a year ago and 31.8% in Q1. Both the dollar amount and the margin were record highs. Q2 OPEX increased by 14% year-on-year and 7% quarter-on-quarter, with SG&A growing a little bit faster than R&D expenses in Q2. R&D expense to sales was 9.5% compared to 10.2% a year ago and 9.3% in Q1. SG&A spending to sales was 10.9% compared to 11.2% a year ago and 10.7% in Q1. The OPEX ratio declined to 20.4% from 21.4% a year ago, but slightly increased from 20.0% in Q1. Thanks to the favorable GP margin, OP margin in Q2 substantially improved to 15.1% from 11.8% in Q1 and 12.7% a year ago, reaching an all-time high. The operating profit in Q2 increased by 42% over a year and 33% over the previous quarter. So in terms of the segmentation performance, year-over-year, infrastructure delivered the strongest revenue growth, followed by power electronics. Thanks to the robust data center demand, mobility, however, continued to struggle due to ongoing market weakness. While automation was impacted by broader macroeconomic headwinds, quarter-over-quarter, power electronics recorded the fastest growth, while mobility and infrastructure showed very modest sequential improvements. Automation, on the other hand, remained relatively soft. Earning-wise, except automation, all other segments recorded varying degrees of QoQ improvements. On a year-on-year basis, infrastructure posted the strongest profit growth, followed by power electronics. In contrast, mobility swung to a loss amid ongoing market softness, while automation also came under pressure from the macro headwinds. Q2 non-op was 900 million dollars versus 1.6 billion dollars in Q1 and 1.9 billion dollars a year ago. The loss in foreign exchange income was driven by the strength of Thai baht over US dollars, while the losses from the investment were mainly related to some minority holdings. In Q2, we had 19.6 billion dollars profit before tax, up 30% year-on-year and 25% quarter-on-quarter. Q2 EBITDA reached $26.8 billion, up 24% year-over-year and 17% quarter-over-quarter, setting another all-time high. Q2 tax expense was about $4.2 billion. The effective tax rate in Q2 was 21.6%. Net profit after tax was about $13.9 billion, up 40% year-on-year and 36% quarter-over-quarter. So the Q2 EPS was 5.37, achieving a new historical high. So now we have a look at the accumulated numbers of the first half. So the first half revenue was $242.9 billion, up 25% from a year ago. Gross profit was up 31% year-on-year, with GP margin improving to 33.7% from 32% a year ago. So the OpEx in first half was up 18% year-on-year, with SG&A up 18% and R&D up 70%. So thanks to the improved economics of scale, SG&A as a percentage of sales dropped to 10.8% from 11.4%. The OpEx ratio also shrank to 20.2% from 21.5% a year ago. As a result, OP margin in first half was up 59% year-on-year, and the OP margin improved to 13.5% from 10.5%. So in terms of the segmentation performance, infrastructure and power electronics delivered strong revenue growth, followed by a moderate pickup in automation. Mobility, however, continued to face soft demand. On the earnings side, infrastructure recorded the most notable profit expansion, with power electronics and automation also seeing some improvements. In contrast, mobility swung to a loss amid a continued weak market environment. So the non-op income came in at $2.5 billion, down from $3.3 billion a year ago. So in first half, we had $35.2 billion pre-tax income. So the first half tax expense was around $7.9 billion, representing a 22.3% effective rate. So the net profit after tax was $24.2 billion versus $15.7 billion a year ago. So the EPS in first half was 9.31, up 54% from a year ago. So first of all, congratulations on the very strong results this quarter. So I have two follow-up questions to ask. So first of all, we know that we have a very long-term ambition and long-term plans, regarding the data center related businesses. And then we also saw one of your peers, the American peer, they just gave the market a pretty positive outlook for next couple of quarters. So could you please just give us some updates or give us maybe more colors on your plans, regarding the data center related business or your product roadmap, and so on and so forth. Okay, so first of all, in response to your question, as I previously or repeatedly, explained, uh, the data centers, especially those, hyperscalers, they continue to invest aggressively into the AI data center deployment. It seems to be a pretty clear trend right now. Of course, going forward, especially if you're looking into the next couple of years, it's still very highly subject to uh, whether this, AI deployment can really, translate into the profit contributions or the revenue contributions. But still, if you look at the recent results just announced by the US hyperscalers, I think if I remember correctly, I think at least some of those, uh, hyperscalers, they actually reported pretty decent results, which which can, somewhat underpin their continuous investments. So that would be the preliminary, view on the AI investments. Or data center investments by those, hyperscaler customers. So, okay, I may have some points to add on. So first of all, I do believe that in terms of the product footprint, we do have a pretty complete spectrum in terms of the product footprint. To the data center market, including our uh, power products, power solutions, and the cooling solutions, such as the liquid to air cooling solutions and also the liquid to liquid cooling solutions. Speaking of the liquid to air solutions, we do believe that we actually enjoy pretty high market share in the liquid to air liquid cooling market. But speaking of the adoption rate of liquid to liquid systems, I think it's something we are not entirely certain about. While it does, offer better energy efficiency than liquid to air and significantly lower CDU costs, but the infrastructure complexity costs and long deployment time make the adoption challenging. But ultimately, the penetration rate will depend on data center operators' strategic considerations, which remain unclear at this point. In contrast, liquid to air systems are gaining traction due to their faster deployment. Okay, so the second question is related to your service revenue. I mean, if we look at the service revenue accounts for the total revenues, I mean, uh for your US competitor, say Vertiv, they actually account for quite a big part of their revenues. So when will we see, I mean, this service revenue is going to be, I mean, become a big part uh to your revenues? So in terms of the service revenue, I think currently indeed it accounts for a relatively uh pretty, I mean, minimal part of our revenues. So I think it's going to take quite some time before we see it become more meaningful. I mean, in terms of the service revenues. So, okay, I also have some points to add on in terms of the service revenues. So, as a head of, the MMA activities, I mean, at Delta. So, we actually have been looking at, we are also looking at the opportunities in the market and seeing that if there are any opportunities that we may maybe acquire some of the target companies. They offer the services, I mean, to those, data center customers. And then also speaking of the service, I mean, if you look at the data center market, you can actually further separate it into the white space and the gray space. So it's actually more complicated than we think than we thought. So I think, but we actually keep an eye on the market in terms of the potential acquisition opportunities in this area. So in terms of your question related to how how we view the AI, the AI outlook in the second half of this year, I think that I just checked the data. Uh, for the CapEx spending, CapEx plan, of Delta, sorry, of Meta this year, it should be $72 billion dollars. So I think in terms of uh the outlook for the second half, is probably not going to see any significant turbulence. So that would be my view of my point of view. Okay, so my question, how much was the impact of tariffs in Q2, and has it been passed on to customers? Most customers have agreed to absorb the additional U.S. tariffs, though we covered some upfront, so which was booked as operating expenses. However, considering the scale of Delta, the overall impact was not very significant. And I assume that your margin expansion, strong margin expansion, I mean, in Q2, was mainly related to the very fast growth of your AI products. But actually, if you look at our GP margin in Q2, I think it's just about like 1 percentage point higher than the previous year. So of course, the overall server power or overall data center related businesses, I mean, the margins, those margins are higher than other product lines. But we think, I mean, yeah, of course they are higher, but just yeah. So what is your current, the current adoption rate of Power Racks? Will large-scale adoption only happen after Kyber platform launches? If not, under what conditions might CSPs adopt earlier? So, as AI servers become increasingly complex, the trend of moving power supplies to a centralized rack is becoming more apparent. We already have some designs, ready with customers. And once they decide to adopt, we can quickly enter mass production. But the Kuiper platform requires not just a standalone power rack, but also high voltage DC specs due to its extremely high power consumption, which requires higher voltage to manage current and heat within controllable limits. So in terms, response to your questions, in terms of the deployment, of liquid to liquid solutions or systems. So I think as we just explained, if you want to really adopt or deploy the full liquid to liquid solutions, I think actually for data centers, they actually uh, require, they actually have very high requirement in terms of the infrastructure or the facility level. So I think at least the liquid to air solutions are going to be probably the mainstream for a while, considering the reasons we just mentioned. So, so for those reasons, just explained. So if you really want to adopt the liquid to liquid solutions that you may, of course, either you build up the new factories or sorry, new data centers, or you have to retrofit the existing ones. So considering, all those, reasons, so is we may probably not really going to see that happen. Uh, in the short run. So in terms of our overall, production plans, for the, for our data center related business, I think considering the cost, the manufacturing costs, and and the, and the supply, and the supply chain. So I think it's more likely that we will continue to produce the components, in Asia. Of course, if you look at the tariff, of Thailand, if it remains, high, at the 36% level, so we may not continue to expand or to move or shift our productions to Delta Thailand, to Thailand, uh, if the tariff remains at the current at this current level. But in terms of the uh in terms of the capacity in the US, we already have some capacity in the US, and we are also building a new plant. The current expansion plan actually has not been adjusted during tariffs changes. So our primary purpose for expanding in the US is to be closer to customers and offer better system solutions and services. And however, manufacturing costs in the US are much higher than in Asia, and the lack of a complete supply chain makes full component manufacturing very difficult. System assembly is feasible, but replicating Asia's supply chain is challenging, is very challenging. So my question is related to the humanoid robotics. So so for example, if Delta is going to, or maybe has the plan to participate or to penetrate into this market. So when you may consider to, where you may consider to produce the components or the products, of the humanoid robotics. I think we do believe that, the market uh, for this, humanoid robotics is enormous in the future. But I think the key, in terms of the service uh, robots, or it's not really related to the maybe the components or the hardware you produce, but it's more, related to the software, especially the AI. The AI, embedded in the robots. And then also you have to, separate the fields, the application fields. So whether this, robots are for the industrial purpose or the robots are going to, in the service field, especially to be, co-work or co-live with the human beings. So in terms of the specs, in terms of the designs, could be hugely, different uh, between or among those different applications. So, in terms of our plans, this uh, robotic market, we are going to actually launch a Delta Robotic Research Center in August. So maybe, just maybe that we will have more insights to share after we dig deeply dig more deeply into this market. So I actually noticed you um, showcased your containerized AI data centers during the Computex event this year. Could you please share more details or give us more colors related to in terms of your plans on this containerized AI data centers? So I think if you look at the current AI data centers are mostly operated or built by those hyperscalers. But in the future, when the co-locations or maybe other enterprises, they are also going to build up their own AI data centers. Um, it's just, actually the solutions for those customers, uh, providing a integrated solution and system to those customers. And for the fast, especially, it actually can be, fast deployed. So I think so the customers, the target customers are different. So my question is related to the tariff. So currently we still don't know the how high the Taiwan, Taiwan's tariff is going to be. But do you have any scenario plannings if our maybe if our tariff is going to be higher, or maybe just on par with or maybe lower than Japanese and Koreans tariff rate? So do you have any, scenario plannings for the tariffs? So first of all, in terms of the tariff, because still, at this point, we don't know the tariff. Level of the tariff. I mean, it's going to be for Taiwan. But for now, as we just, explained, uh, our customers have absorbed most of the tariffs by themselves. So it actually hasn't really have, any significant impact on us. But in terms of the manufacturing footprint, we actually also have a pretty diversified manufacturing footprint. Not just we don't just have, factories in Taiwan, but also elsewhere. So the tariff, is something that we totally out of our control. But we, as a company, we do have to, uh, we, the, the only thing that we can do is always to be more agile and more flexible, to fulfill customers' need. So I think actually since 2015, uh, our strategy, of being more diversification not just in terms of the product lines, but also in terms of the production capacity, the geographics, I mean, locations of our capacity. So as you can see, I mean, right now, because at this point, we are, I mean, having this meeting, we still don't know the tariff level. So it's no way for us to really plan your capacity. I mean, based on the pretty unclear and uncertain tariff levels. And also in terms of the capacity, it's not just for this year, for next year, it's actually for the long-term plan. So in terms of our long-term capacity planning, it's not going to really be adjusted, I mean, by the short-term uh changes. So what we can actually do is not, I mean, to plan our capacity based on the unclear and uncertain tariff policies. But what we can do is, as I said, being more agile and more flexible, and then quickly respond to the any crisis. Uh, so that is what we can do. I mean. So this kind of, I mean, short-term changes is not going to really impact on the long-term uh strategic direction and planning. So my first question is because as we know that in Q2, some of your customers actually you actually had some pulling orders because of the tariffs. So uh, should we still expect the normal seasonality? I mean, which means that we will see uh the high season and peak season in Q3. And then, so my answer is, I think, what I can say is, I think the second half, I think, if things, I mean, go smoothly, I think the second half, I mean, of this year is still going to be better than the first half of the year. But for next year, it's still too early to comment. So in terms of your question, related to our assembly plan, final assembly plan in the future, I think as I just, explained earlier. So I think, as I said, uh, for the U.S. market, I think it's very likely that we will have the final assembly in the U.S. But still, for the components manufacturing, uh, I mean, the to produce the components in the U.S. considering the cost and the supply chain, it's not really feasible. It's not really a feasible thing to do. So, I have a question related to your capacity planning in Thailand. So, considering the current higher level tariff, to Thailand, so is there any ongoing expansion plan, in Thailand? Yes, we are actually, still in the process of building up our, new factories in Thailand. So as I said, those are for the long-term, uh, development and long-term planning. So it's not going to, really adjust it, by the near-term changes. So in terms of your AI server powers, can you give us, I mean, a split between, whether they are for the GPUs, or for the ASICs? So sorry, we don't have the split. Okay, so I have a question regarding the R&D expenses as percentage of your total revenues. So as we can see that I mean the R&D as a percentage, I mean as a percentage of your sales was about 9.5% in Q2. So should we expect this, 9.5% is going to be the new norm uh, in terms of the R&D percentage level going forward? So I think going forward, we will continue to uh, uh, invest a lot into R&D. It's not just for existing businesses, but also for new businesses. But our plan is more like to maybe to maintain or keep the R&D expense ratio like maybe around 9%. But of course, it's still very much subject to uh, the the revenues, the top line growth. And then, we actually continue to always keep an eye, in the market, and then we always try to maybe to get into the new businesses. So we will continue to invest into the new areas. But of course, that we have to, to consider, many factors very carefully. For example, whether those, new areas or new businesses are going to, uh, be related to our core competencies, like they are maybe they are the natural extensions of our uh, core businesses, and that would be a very critical criteria when we are, assessing uh, the opportunities of, the opportunities of the new areas or new business. So the first question, my next question is related to the solar panels. As we can see, recently the typhoon in Taiwan, the southern part of Taiwan actually has hugely damaged many, solar panels in Tainan. So do you think that is going to be a big issue to Delta? And then also, as we can see, in the US, uh, the government seems, they are phasing out some of the subsidies for the solar industries. Is that going to be a big issue to Delta? So, I mean, in terms of the damage, I mean, the recent damage in Tainan, actually, before we launch, before we launch any uh, renewable renewable energy plants, I mean, we actually always make sure to conduct very strict due diligence. So even, I mean, even though that recently we have seen, I mean, very serious damage, I mean, in the southern part of Taiwan, but to Delta, we actually only had very, very minimal damage. I mean, in terms of the solar panels. Uh, Set up, I mean, in our own factories. So we don't actually see that as a very big issues to us. And then speaking of the second question related to the U.S. government, it seems like they are kind of phasing out some of the subsidy for the renewable energy, especially maybe the solar systems. I think we are not in a position to really comment on the policy, but still, we do believe that, I mean, uh, for the enterprises, I mean, there is still pretty high demand, I mean, for the renewable energies in order to meet their decarbonization target. So maybe we will have the final questions from the audience. So my question is still, I mean, related to the tariff issue. I mean, the Thailand tariff currently is 36%. So I think if the tariff, I mean, of the Thailand does, I mean, remain 36%, is definitely going to be a big impact on the business or the orders, I mean, in Thailand for next year. Uh,